providing financial straight talk for those working and enjoying life after work. This is America's financial headquarters.
Research shows, and this is according to the National Clearinghouse for Long-Term Care Information. So this is coming directly from the U.S. Department of Health and Human Services. Research shows that about 70% of people aged 65 or older will need long-term care services at some point in their lifetime.
70%.
70%. So it is more than the coin toss that if you're 65 years old, it's more than a coin toss that in one way, shape, or form, you will need long-term care services. Now, that might be for as short as a month. That could be for as long as 8, 10, 12 years. But those are the stats.
So odds are, if you're over the age of 60, this is the #1 financial threat to your future.
It very well could be. You're absolutely right. And when you look at the overall costs, and one of the things that we've done, we've made a survey. One of the largest insurers for this risk, for long-term care risk, has put together a survey that looks at every single city, every single nook and cranny throughout the country, and has taken an average of all the costs associated with long-term care, and ultimately, paying that bill, what you can expect. And I wanted to share a little bit with everybody about what the differences are across the country. There's a number of different types of care. There's homemaker services, where it's from a licensed professional, but it's hands-off care, such as helping people with cooking and running errands. The national median hourly rate is $18 an hour. There's home health aid services, which will provide more of a hands-on personal care, but not necessarily medical care right in the home. So these two we've been talking about are home health care, which if you sit down and ask yourself, where would you rather receive care, most people are going to want to receive it in their home.
Yeah, it's what I usually call indirect care, because
Right.
they're not really coming in to help you with the health side of things. They're coming in to help you with the other things that you can't do because of your health.
Yeah, and the cost for that care is $19 an hour. So if you equate that out to an 8-hour day, it's about $55,000 a year to foot that bill. And this is a national average. Now, one of the biggest misconceptions that I think it's important to discuss is when people think about the word or they hear the term long-term care insurance, they immediately think nursing home care insurance. And quite frankly, it's just the opposite of that.
Yeah, it's not where most of the benefit is.
No, I mean, the vast majority of all claims that are adjudicated, that are paid, are done to home health care.
I was wondering
providers.
if you knew what that word meant.
Oh, I did.
Adjudicated.
It's
There's
a big
good
word.
one.
It was my word.
Somebody write that down.
It was my word of the day last month. So at any rate, so that's ultimately the thing to think about. If you're wrestling with whether or not to purchase long-term care insurance, that would be something, where would you prefer to have your care done? Now, moving into the facility side of things, there are multiple different types of manners in which, or types of facilities. There are assisted living facilities, which basically provide you a one-bedroom, single occupancy. They're going to provide some hands-on personal care as well as some medical care. The average monthly national rate is $3,300, but then you jump into
$3,300 a month for that.
Correct. But then when you get into the nursing home care, we're talking about skilled nursing care 24 hours a day. The national daily rate average is $222. So you need to back. They do that in bite-sized numbers, but when you look at it from an annual perspective, it's $81,000 a year.
Wow.
So if you're in a nursing home for a year, 2 years, 3 years, you're talking $80,000, $160,000, $240,000 that has to come from somewhere.
Yeah, so if you don't have insurance, it's coming out of your assets. It's coming out of your accounts.
That's exactly right. And we've been discussing estate planning and how to preserve some of the benefit in the estate for your beneficiaries. That is a big deal. Now, this varies across the country. If you look at Orange County, California, the cost for private nursing home care on average is $102,000 a year, whereas if you're sitting in Arkansas, it's $59,000 a year. But more Midwest America, if you looked at Michigan, for example, the average is about $88,000 a year. So it's important to know these numbers. we wanted to transition this discussion into our fly on the wall discussion.
So if you're just joining us, though, we've been talking about the high cost of long-term care services, what that means to you financially, what that means to your financial future. Is that an insurable risk, or are you going to go it alone and pay for it with out-of-pocket costs? And that's now leading us right into the fly on the wall discussion.
You're right. And this is probably one of the most difficult conversations that people will have with an advisor. And we encourage you, if you have not had this conversation, go to financialhq.com. We'd be happy to, you can connect with a network advisor who can have this conversation with you. But here's ultimately the big concerns that people face. Number one, it's not an easy conversation because you're talking about, what's going to happen when I get old and I can't, move quite as well and I can't get around and I need help, putting my sweater on and tying my shoes in the morning. But when you really think about it, the concerns and the reasons why clients, don't make the decision to purchase long-term care insurance is because they have the fear if I don't need it. And number two, they hate the annual premiums. They hate having to write that check every month, every year, whatever it is. And so, which is typically how long-term care insurance is purchased.
So the idea being that you really can only win if you lose. In other words, if I'm paying these premiums and I never need that service, that assistance, that coverage, now I've wasted all that money.
If you're in the 30%.
Right.
You can look at it and say, this has been a waste.
So people decide they want to gamble now.
But there is an option. There's an alternative to traditional long-term care insurance, and it's referred to as asset-based long-term care insurance. And in a nutshell, what asset-based long-term care insurance is you're making a single payment, a one-time payment of a certain dollar amount. And this is all going to depend on health. There's obviously underwriting. It's going to also, be factored with your age and that sort of thing. But let me just share some numbers with you. If you're a male age 60.
So just a second. So the difference, just so they can wrap their minds around that when they're listening to this conversation, traditional long-term care insurance, you're paying premiums on a regular basis.
Right.
So say an annual basis, you're paying these premiums in, and you have kind of what I would call a normal insurance relationship. Just like you're paying your homeowners, your auto insurance, or whatever. The asset-based long-term care, you're saying it's a single payment, so it's really an asset. You're moving some money from one pocket to another pocket to now address this issue.
That's right. I'm going to give an example of a male age 60 who's in good health. $50,000, just as an example, might make, basically you get three buckets. You have your bucket of $50,000, then you have a bucket that, what happens if I don't ever use the insurance and I pass away? I would get a $90,000 death benefit to my beneficiaries. And then
just like life insurance.
That's exactly right. It's actually based on a life insurance chassis. In addition, I've created a $325,000 bucket or pool of money that I can reach into for the purposes of long-term care insurance. So basically the big thing is that you get the benefit whether you live, you die, or if you want to quit and you want your premium back, there are certain policies and provisions that would afford you the ability to reach in and say, I want my $50,000 back.